My credit score is bad, can I still buy a home? Your ability to get a lender to fund your home depends largely, but not solely, on your credit score. A good credit score of at least 670 will quickly get you a credible lender that will finance your home payment. However, this video is not for those in the lucky category. We want to examine the borrowing power of people with 500 to 669 FICO scores who wish to get a loan to finance their homes. Borrowers in this category can further be divided into two, ones with average credit scores and ones with bad credit scores. What is a bad credit score? When it comes to credit scores, there is no rule of thumb for all lenders. Different lenders have different minimum credit score requirements for borrowers. They also consider other factors such as borrowers' available down payment, income, and debts in collection. In addition, lenders will also reduce their credit score requirements for borrowers who are eligible for government-backed loans such as VA, FHA, and USDA mortgages. However, to all lenders, a credit score that is less than 580 is bad. If your credit score is between 500 and 579, your home loan options will be fairly limited. People with average credit scores, say between 580 and 669, have more options but not as many options as those with higher credit scores. However, if your credit score is lower than 500, you must build a better score first before considering buying your home. This video contains adequate information on purchasing your home with a bad or average credit score, as well as how you can improve your situation if your credit score is just too low. Home loan mortgages for borrowers with average credit scores. If your credit score is between 580 to 669, it is considered an average credit score. You can apply for several home loan mortgages, from government-backed loans to conventional loans. However, you might need to have a high income and down payment to increase your chances of getting a lender that will finance your purchase. While lenders go low for mortgage plans that the government insures, they have higher credit score requirements for conventional loans. Here are home loan options available for borrowers with average credit scores. FHA mortgage with 3.5% down payment. If you have a credit score of 580 and above, you can get a Federal Housing Administration home loan with only a 3.5% down payment. The federal government backs this low credit score loan plan. FHA home loan plans are available only for people who are getting a primary residence or first-time buyers. To be eligible, you have to show evidence of being employed in the last 2 years before applying for the loan. The only catch with FHA loans is that you have to pay 2 FHA mortgage insurance. The upfront mortgage insurance premium is 1.75% of the amount the lender is willing to give you. It is a one-time payment made upon the receipt of the loan. The other insurance is the annual mortgage insurance premium, which is 0.45 to 1.05% of the upfront mortgage insurance premium. Lenders also expect borrowers to spend only 30% of their gross income on monthly mortgage repayments and 43 to 50% of their gross income on mortgage and all other monthly debt payments to be eligible for FHA home loans. VA home loans for veterans and active duty service members. Veterans and active duty service members can purchase a home with as little as 580 credit scores. Some lenders will even grant home loans to eligible borrowers who do not have up to 580 credit scores, but they are very rare to find. Generally, most lenders prefer to give VA loans to veterans, service members, and eligible spouses with 620 credit scores. The great thing about this government-backed loan is that there is no down payment needed at all. VA home loans also have the lowest interest rates, with no mortgage insurance payments or risk-based pricing adjustments. USDA loans. This U.S. Department of Agriculture home loan is designed to encourage people to buy homes in rural areas. It is available for low-income earners who wish to purchase homes in rural areas or specific suburbs. Most lenders demand a minimum credit score of 640 for USDA loans. Conventional loans. With as low as a 620 credit score, you can get a conventional home loan to finance your property. These loans do not have the requirements of government-backed loans, but they have higher interest rates and fees for people with bad credit scores. The fees, known as Pay Loan Level Price Adjustments, LLPAs, are based on borrowers' credit scores and the ratio between the loan and the property's value, LTV. Available down payment often determines LLPAs. Home loan options for borrowers with bad credit scores, 500 to 579. As stated earlier, home loan options are pretty limited for people with bad credit scores. If you have lower than a 580 FICO credit score, you might be limited to FHA and non-qualified mortgages. FHA mortgage with 10% down payment. With a 10% down payment and a credit score of 500 to 579, borrowers can get home loan financing from approved lenders. The requirements for the loan are similar to those we stated earlier for FHA loans with 3.5% down payments. Just like other loans, a large down payment will reduce the strain on the lender. So they can easily give you money even with your low credit score. Non-qualified mortgages. Some banks don't rely on investors to settle their mortgage loans. This gives them the advantage of deciding the requirements they want from lenders. Most banks that do this offer non-qualified mortgage plans to borrowers with 500 to 579 credit scores. You can enjoy the services of a mortgage broker or ask your bank about their special mortgage plans to get the best of non-qualified mortgages. It is important to note here that all lenders are most comfortable with borrowers with good credit scores. Most lenders set their requirements high, so it might be very difficult for you to get a lender with an average or good credit score. Here are some things you can do to increase your credit score. Pay down credit card balance. One thing you can do to increase your credit score and your chance of getting a lender is to reduce your credit card balance. If you have a balance above 30% of your limit, you are doing a lot of harm to your credit score. Your card utilization rate accounts for 30% of your credit score, so it is important to take care of it to have a higher score. You can also increase your card limit to give you more wiggle room for card utilization. For instance, if you have a limit of $10,000 with a balance of $3,000, your utilization ratio will be lower than someone with a limit of $5,000 and a balance of $3,000. You can also add new accounts, preferably at once, to your credit history for more wiggle room. Focus on prompt payments. While card utilization accounts for 30% of your credit score, your payment history accounts for 35% of your credit score. If you have been making late payments or you have been missing payments completely, you need to focus on making prompt payments. Doing that will increase your chances of finally getting your dream home with hardly any hassle or exorbitant interests. Check for and contest inaccuracies. Don't leave your fate in the hands of others. It is your right to check your credit history for inaccurate claims that could be pulling down your score. If you notice anything strange, report it immediately and have the credit bureau remove it. Foreclosures, collection accounts, and similar issues will badly damage your credit score, so you must report false foreclosure reports and collection account histories. You should also avoid them as much as possible if you are looking to buy a home later in the future. Get rid of collection accounts. Collection accounts show lenders that you have failed to honor your part of a previous transaction. Having a collection account in your credit history tells a lender that you have once failed to meet your part of a transaction, and you will probably do the same to them. It is very damaging to your credit history, but you can request a goodwill deletion from your creditor or pay to have them removed.